What is up, YouTube? What is up? We're back with another lesson. And I want to say, first off, I hope everyone is having an amazing day today. It's Friday. It was a fantastic week. A lot of students in the Discord just completely dominated the markets this week, even with it being NFP week. So that um, is awesome. It lets me know that my students are getting better, and that's all I ask for. But let's get right into it. So today I want to be talking about liquidity providers, or just liquidity in general. So let's go to this, right? So when you think of liquidity, right, it's liquidity is essentially just money, okay? so so you need to ask yourself, when finding liquidity, you need to ask yourself, you know, where is the money? Where is money sitting, right? So essentially, right, liquidity is above every high and below every low. And what I mean by that is, above every high is buy stops, and below every low are sell stops. Or above every high also will be sell position stop losses. Okay. And below every low also will be buy position stop losses. So for instance, say someone's buying here, right? They'll have their stop loss maybe, 15, 20 pips below, and say somebody's selling here, right? And they'll have their stop loss, 15, 20, 30. Some people even do 40, 50 pip stop losses above uh, um, their entry, right? So you got to think, above every high is buy stops and selling position stop losses, and below every low is sell stops and buy position stop losses. So so why am I saying that? Like, what am I getting to um when I say that, right? So you see right here, I say eventually because it doesn't always have to happen, but eventually every high has to get taken out by a higher high, and every low has to get taken out by a lower low. Now, like I just said, it doesn't have to do that, right? It's just what I have seen, essentially. So that's what I know, and it's been working for me and the students that I teach. So if you take a look at this, in general, you'll soon quick to notice, or you'll be quick to notice that, when there's a high and a low, there's going to be a new high and a new low, um, taking out these previous lows and highs, right? So, like I say in previous videos before, um, the bank's objective is to uh, sell higher than everyone else and buy lower than everyone else. Okay. So, in understanding that, that will help you understand um, when manipulation comes into the market above a certain high or below, certain lows, right? So, um, yeah, as you can see, right, there's, this low gets taken out by this low, this high gets taken out by this high. There's a minor low here that gets taken out by this low. This high gets taken out by this high. And why am I saying, where am I going with this also, right? So after um, after we see liquidity that has been captured, that is our time to get in the market or be waiting for a setup. So essentially like this, right? um equal highs and equal lows are a form of liquidity as well, not just a singular high, right? There's also equal highs and equal lows is where you can find liquidity as well. And a matter of fact, um to train your eyes easier or in an easier way, equal highs and equal lows will be what um, you will be able to see a lot easier when spotting liquidity. So, for instance, right here, you see a double top present itself, and you have to think, you know, okay, so who's in the market now, right? Who is putting positions in the market now? So let's say, you got to think like if I sell here, who am I trading in line with? I'm trading in line with retail positions, right? With retail. Okay. So in knowing this and knowing that retail, you know, is selling in this certain position here, wherever it may be, you need to understand that their stop losses and breakout traders that trade when the market breaks structure, they have their buy stops, all placed above this, the previous high over here, right? And essentially what happens is the market will come up, collect all of that liquidity that was to the left, and fall in the opposite direction, the direction that actually retail intended the market to go. The problem is that retail will enter the market very early in some cases, and this is why that happens. So here in this example, on GBP USD, actually yesterday, this was a setup that I actually had taken yesterday. I sent this to the free Telegram group, actually. But what we can learn from this setup is that it's very textbook. It's exactly what I look for in the market, right? So from that last slide that we just that we just saw, right, we have this double top here. Okay. So you have to think retail is probably selling in this area here. You have to think deeper. You have to think outside of the box when um, you're taking these positions, right? And no doubt, if you sold here, the market went down a little bit and broke this low. So, all in all, it maybe would have been a profitable trade, but that's not what we are looking for in the market. Okay. So you have to think, retail is selling here. Now we need to wait for certain types of manipulation in the market, okay? So after I've seen this high, right, get broken and reverse at such an a volatile pace, such an aggressive move to the downside, I I already knew that the manipulation was occurring, right? That this liquidity had already or was being captured right in front of my eye. So what I did and what what anyone else should do that trades this way, I guess I should say, you need to wait for this corrective move back into that area of manipulation. So then you can sell off. So yeah, I caught a really nice sell for 50 pips on GBP USD yesterday, um, just like this. Okay, so vice versa, right? You will see, um, just like in this slide with the double top, you will see it vice versa um, for bullishness also, right? So once again, you got to understand that when we see a double bottom like this, you have to understand who is selling, or excuse me, who is buying in this area, right? Has any manipulation occurred yet in this area? And if your answer is no, or if you don't know, um, then I have a YouTube video from the past. I think it's called Market Manipulation or something like that. I would go and take a watch on that so you can understand more about how price gets manipulated in certain ways. So, but if you do understand this and you know what you're looking for, um, you know exactly who is getting in positions here. And you know what they say, they say 95% of people lose money, or what's the saying? It's 95% of people lose 95% of their account within 95 days or something like that. It's a very powerful, very, very powerful thing to keep in the back of your head, right? Because when you're trading this way, you're trading in line with 95% of people. And the banks know this. The banks know that 95% of people, uh, trade the same way. We all do this to ourselves. We all um, have learned from Google typing in, uh, forex chart patterns or forex candlestick patterns at least one time or another in our life, right? So you need to understand who you're trading in line with in that area. So what happens is retail will have this volatile spike to the downside, capturing all of this liquidity before spiking or before going back up in the intended direction of what retail was wanting the market to go in the first place. So it's not even like that retail has a directional bias wrong most of the time, right? Like retail can be right, right? Even like 100% of the time, retail can be right about directional bias per se, but it's just the point of their entry where they enter way too early in the market before any type of manipulation occurs, okay? So on this next slide, you can see here clearly at the bottom here, we have this triple bottom, right? So you guys know what a triple bottom is. It's very self-explanatory. So you have to think, right? You have to think retail is trained, they have trained their eyes to see these type of um, patterns, these type of behaviors in the market. And what I'm telling you is you need to train your eyes to see the opposite. You need to train yourself. You need to untrain yourself from this and retrain yourself to spot manipulation when it's occurring right in front of you. Okay. So we have this triple bottom right here. And when price shot through this triple bottom, right, it got out of there very, very quickly and made a new high. It gave us that new high, that higher high. And so when that happens, right, we can see back on this slide, since I didn't explain these very much, this diagram over here, right, when liquidity is captured, we should see a very, very, very reactive impulse to the upside or to the downside, depending on if you're looking for buys or sells. We should see that strong reaction after liquidity has been captured. So what we want to wait for is that corrective move back to the open of that last bullish candle, or excuse me, that last bearish candle before seeing that bullish impulse. And vice versa, right? That last bullish candle before we get that bearish impulse. So back on this chart here, we see, we located the equal lows, right? So once again, what is liquidity, right? It's money. So where is the money? Below, there's probably sell stops and then buy stop loss positions sitting under this area, which is why the market was pulled just slightly under this, right? It's like almost like a magnet, right? Liquidity is almost like a magnet in a sense. The market will pull itself to it. So um after that, it was only 30 minutes, an hour. It was about 2 hours and the market had gotten out of this area. Okay, so price didn't stay around very long in this area and gave us a new high like I had mentioned before. And we get this corrective impulse down back into this inefficiency. Now I will later on I will make a video going over inefficiency. That's for a video later, not right now. But this entry right here off of the bank's manipulation, you can see it gave us a very, very clean buy position with little to no drawdown um, for a beautiful 200 pip potential move. Okay. And yeah, you know, that's basically liquidity, right? In the simplest terms, is, liquidity is money. And you need to know exactly what you're looking for when you're looking for money. Okay. So if you guys learned anything from this video, there's also a PDF that I made to go with this video. I will put a link in the description, and you can go to that link and find the PDF there. And also, if you guys had anything that resonated with you in this video, like and give me a subscribe. It will mean a lot to me. It will mean that it'll show me that you guys are sticking with me and watching my videos. And also comment down below and tell me what resonated with you or what you learned in this video. So, because I love hearing from all of you guys. And I like watching everyone that is either in the course or just simply follows my YouTube. I love seeing you guys progress as not only traders but as individuals. And yeah, it's amazing to me. But yeah, let's keep winning, let's keep dominating these markets, and I hope you all have an amazing um 4th of July, and stay safe, and I will catch you guys in the next one. Peace out.